Okay, yep, that hurts. So yesterday, quick story. I was at work lifting some boxes, and during the heat, of course you guys know Vegas heat, super hot, very hot. And I guess I wasn't hydrated enough. One of my muscles just gave out. And yeah, now I'm walking with a limp. Oh, it was so painful too. Oh my god, like I just saw my left calf just shift up, like it's like stiffen up. Oh, it hurt so bad. But regardless, I'm walking a limp, pretty much on telework until then. I'm an IT guy, really, so I don't know why I was out there, but I was just helping out the rest of my crew. And yeah, so that's pretty much happened with me. So regardless, we're here, we're gonna make some videos, damn it. What's up guys, and welcome to the video with your hosts, Talos, one half of the tag team champions, the Stully Boys, and we're here for some more market watch videos, even though I'm injured, damn it. But it's okay, regardless. We're gonna be talking about some EV stocks right now. For those that may not know, electric vehicle stocks. Yeah, you probably would think there's only one right there, right? There's only one out there. Who else could possibly compete against the big behemoth, the guy, the god, Elon Musk and his company, Tesla? But what if I said there's actually some other companies that are up and coming? Some of them are maybe even more ahead than Elon Musk is. Curious? It's about to get juicy yet again, so grab your favorite juice. Mine being, of course, the cranberry juice. Cranberry, actually white strawberry cranberry, I believe it was. I have to look it up real quick.
A few moments later.
It is right here. I actually had it kind of right. It's basically the white cranberry strawberry juice cocktail. It's very good. Not sponsored, but I love it. And of course, guys, if there's anything you guys want to talk about in this video, we also live stream on Twitch every Tuesday, Friday, and Sunday. Sometimes also Saturdays too. But for the most part, those are our scheduled time frame around 6 p.m. Pacific Standard Time. So come join us, check us out, hang out with us, play some games, talk about stocks, all that good stuff right on Twitch. And of course, if you want to support the channel, be sure to hit that like button right here in this video. Subscribe to us for more content such as this. Now, a big thank you to today's sponsored video. Roll that clip. Today's sponsored video is Robinhood, the easy to use investment app right at your fingertips.
Robinhood makes purchasing and watching stocks, ETFs, and cryptocurrency simple and easy.
Not only that, but Robinhood also is commission free, which means you don't pay to buy or sell any of your investments.
You can also opt in with Robinhood Gold, which lets you purchase and sell stocks when the markets are closed.
So go ahead and check out our affiliate links down below. And when you do and sign up, you get a free share. So definitely check it out. It also helps support the show as well. So as per usual, as a disclaimer, I am not a financial advisor, so I can't tell you what to do with your money, but I'm just here to educate you on what other options are there in the world of stocks and its markets, stock markets. Sure. All right, enough rambling. Let's roll into it. Now, what really sparked the conversation for this particular discussion today is an article that I found a few days ago, and I want to talk about it right now. So this is the article in question. 6 EV stocks every investor should know. 6. Of course, we already know one of them. So let's just roll into it and see exactly what this article has in store for us. The big one, of course, here is Tesla. We all know Tesla. We all love Tesla. Some people may not like Tesla. I don't know. That's your prerogative. But regardless, Tesla is doing fantastically this year. Right now, they're roughly, according to this article, we'll probably go to more exact numbers later in this video. But for now, as according to this article, there are 1,500 per share. And according to this, is the electric vehicle market. But of course, there's others out there. Tesla has changed the game, led by the charismatic CEO. I love this dude, by the way, Elon Musk, making the electric vehicle cool. I still would like an affordable sports electric car. Yes, there's the Tesla Roadster, but you know how much that is? Yeah, But regardless, that'll be something to watch out for in the future. And this article hit the nail in a door now right here. Tesla stocks has been expensive by most traditional valuation metrics for substantially its entire history. Now, I did recall, obviously, I've talked about this in my previous videos, where I bought Tesla right around $83 per share, and they were super cheap at that time. All they had, I believe, was the Model S. I don't think they, and of course they had a prototype of the Roadster, I believe, if I'm not mistaken. But they didn't have anything like I guess affordable. This is before the Model X. Before the Model 3, of course, that was the more affordable options, and that's when it kind of spiked up because now it's all to the general market. It's not just the high-end market. With the Model S, they were like at least 70,000 maybe, and then the Model X was, I believe, around 85,000 starting before options, and options were plentiful. Yeah, they were super expensive, but now they came out with the Model 3, which I believe started at around 50,000, but options of course made that up to like at least 65-70,000 if you wanted like the performance package and other stuff and a different color. I don't know, there's a lot of stuff involved with it. But going back into the stock here, so I see the numbers differently. Tesla might sell something at a ballpark of 500,000 cars this year. At the current market cap, investors are paying over $556,000 for each car sold. Now let's actually roll into Robinhood now. It is still roughly right around the same price, $1,500. That's the first time I'm recording when the market is actually live, so you actually see that live tickle feed right there. But this is the current day-to-day right now for today's. But let's look at the past month at least. They were less than 1,000 a month ago. It went as high as 1,700. Kind of dipped a little bit, now averaging around 1,500 right now. So they are definitely a behemoth. Past 3 months, 700. Even crazier, past year, 200. If you bought this 1 year ago, it was only 200. Now it's 1,500. That's insane. All right, let's look at the max history. I remember it being at 200 at one point and then dropped. Okay, I remember it around here, basically around 2013. Actually, I didn't think it was that early, but it went as high as I think almost $230 per share, and then it dropped crazy. I want to say it dropped as low as 80. I can't remember exactly. Maybe 90. And that's when I bought a bunch of around that time. So it was around late 2013, early 2014 is when I got them, and I kept it obviously. I kind of wish I bought more, but I didn't think it was gonna spike up this much. I kind of like fell off the radar for Tesla in terms of like because I knew it was gonna do well. I just didn't know how well it was gonna do well. So I kind of wish I bought more, but at the same time, I'm glad I kept what I had. And then of course it was pretty much stagnant for a while. So it looks like it was like 2016 time frame, and it actually lowered the stock because obviously they were kind of at that time it was like way too expensive. Not a lot of people were buying it. Then it came out with the Model 3. So around 2016 is when the Model 3 was announced, and then 2016 is and 2017 is when it started like actually releasing. It did go up a little bit, went up to 300 now. And it kind of stayed up there for a little bit, and then it kind of dipped a little bit now. So what the hell happened here to make it spike up so much? Now, according to this article, stocks of Tesla spike higher into record territory Friday after the electric vehicle maker reported deliveries that rose above Wall Street's expectations, shot up as much as 5.5% to an intraday high of $454 before pairing gains to be up to 3.5 in the afternoon trading. Of course, that's during the initial high, right around this time frame right here, and it kept rising higher and higher to 900 even. Dropped slightly. That was of course during the pandemic time frame. So it rose back to where it was almost 2 months later. So that would have been a decent time to buy if you had that capital. If you would have bought at 500, you've been well rewarded. Because now it's at 1,500. Regardless, Tesla has been doing well. So that's the point I'm kind of getting across here. Tesla's not going anywhere. Tesla's definitely the market lead in electric vehicles, EV for short. But for most part, what does that say about other EV companies? Are they even able to compete against Tesla? Does it even matter? Should it matter? And I believe it always matters, because competition is always nice. Like I mentioned in my previous video, like even though the behemoth Amazon is what it is, it's nice to have other people like Alibaba competing against Amazon in that regard. Competition is nice, and the same applies here. Tesla is the leader in this industry, but it's nice to have competition out there because we need options, we need variety. We can't let one company take control of the entire market, and that as a consumer will not be good. Tesla so far has been doing well in terms of keeping the prices down for consumers out there, and other companies like Mercedes, BMW, Chevrolet, they're coming out with their own electric vehicles, but obviously they're not dedicated. They're not that's not their main market. That's not their mainstream market. These 5 companies I'm gonna briefly talk about in the next few minutes are dedicated EV companies that's all they're gonna be doing, whether it be commercial, consumer, or both, similar to what Tesla's trying to do right here. So let's roll into it. That first company is Nikola, which is, you know, kind of funny actually, because if you know anything about the original Nikola, his name is Nikola Tesla. So that's just basically hand in hand competing against the electric company Tesla. Frame inventor Nikola Tesla, the rival and complementary of Thomas Edison back in the day. Now, this company was formed back in 2014. It primarily makes passenger cars, better known for its 18-wheeler trucks, focusing exclusively on pluggable batteries. Nikola produces both pluggable electric vehicles and hydrogen-fueled cells-powered trucks. They went public back in June, merging with an existing public company, Vector IQ. While its vehicles are attractive and generating a lot of buzz, Nikola hasn't actually sold any of them yet. The company has pre-orders, but isn't expecting to deliver an actual finished product for months. We don't know exactly when they're going to be starting to do this, but obviously, as you can see from this picture right here, they're focusing more on commercial vehicles, electric trucks such as this. Now, rolling into the stock here of Nikola, it's only $32 a share, which is actually very, very small and affordable. It's very new. It IPO'd back in June 3rd, I think. So let's go back a little bit further. So June 3rd is when it actually IPO'd. It spiked up when it first came up to $80 per share, but it kind of dwindled down because obviously they haven't sold anything yet. They have pre-orders, but nothing has been delivered. That's kind of like the idea behind Tesla when it first came out. They had all this promise, but no cars. How are you going to invest in the company with no actual products? So Elon Musk at that time was trying to plant that seed in everyone's brains that this is his vision. Buy into his vision and you'll be rewarded. And that's kind of like how I see with Nikola here. There's a lot of promising stuff with this, especially with commercials. Like commercial market is definitely huge. Trucks will always be here for transporting goods around the world. No matter what tech is out there, we all need ships to be delivered coast to coast, and trucks is the way to do it. Now, I'm not sure if this is going to be autonomous trucks. That's a whole different side of things, but definitely the electric side is definitely good in the market. So this has a huge potential, and the market cap is sitting at around $11.84 billion. No dividend yield, but that's fine. It's a value stock. It's in a growth potential stock. So that's where we're kind of going, and it's also in Arizona, so that's cool. My family lives close there. Now let's roll into the next one real quick. Now we're kind of jumping around a lot with stocks, but basically there's a lot out there, and if you guys want me to kind of dive more in deep with some of these companies, let me know in the comments down below, and we can go and talk more about these companies in more detail. So let's roll into the next one here, right here, NIO. This is actually one of my favorites. It's a China-based company. It has interest in several reasons. To start, China has far less of the dynamic energy industry to support and still import most of its fossil fuels. This gives the country far more of an incentive to lower energy cost imports by pushing electric vehicles ownership. And as you guys know, China's air quality is not that great. So especially in big cities, so moving to a more electric vehicle will actually, you know, help clean that environment a little bit. Now, some of the negatives with NIO is obviously China stocks do not have the best reputation for clean accounting, and NIO carries a lot of debt to boot. Its debt to equity ratio is ridiculously high at 9.3. Valuation is unsurprisingly problematic as well, but it shows a lot of promise. So in terms of cars they use, check this out. This is one of their SUVs right now, a more conservative look. Obviously, SUVs are huge with the market. Obviously, if you want to get into get higher off the road, and in terms of like, obviously it's an electric vehicle, so no gas intake at all. Possibly a huge seller for NIO. I'm not sure if this vehicle is available for pre-order or in delivery, but this is actually a good prototype right here for you guys to dive into. Another vehicle that I'm very interested from Neo is this one right here. Obviously, I'm big on like exotic / sports cars, and this looks very futuristic, very nice, and also very quick. Rolling to a stock though, it's actually also relatively cheap as well at $12 per share. 1 month out, it was low as $7, averaging around 13 in here. 3 month history though, now that is when it makes a difference. It was as low as like $3 3 months ago, and it's already what 5 times more. And of course, one here even better at the lowest being at the $1 scale. So obviously you could see a lot of growth potential here. It IPO'd around 2018, so it's also relatively new as well. There's a lot of potential, but of course, as an investor, you typically want something right away. So that's pretty much why the stock kind of tanked a little bit to as low as $1. But now that we're actually seeing some prototypes, some more cars, more buzz, more excitement, that's when we see the spikes. And that's exactly what you need to generate. Will really spike up this price, obviously, if it meets higher delivery expectations than what the Wall Street predicted. So that's exactly what Tesla did. And if they can do that, this can also spike up to higher values, 100, 200, maybe even 1500 like Tesla. We'll see though. It's definitely a potential, and this is one of my favorites that I'm definitely watching and slowly buying more and more. It has a market cap of 11.25 billion. Also no dividend yield, but similar to other investments, these are more growth / value stocks. So it's definitely something to keep your eye on for sure. All right, rolling into the next one is this company, the Electra Meccanica vehicles. Terrible name, not gonna lie. These are more the commercial cars versus the consumer cars, as you can see from these pictures right here. And frankly, they are hideous, not gonna lie, but they are another alternative for you. They're also a Chinese car maker, and they fall under the company of Solo brand. Now, the big difference here is this car has only 1 seat, and it's 3 wheels, making it look like a go-kart more than a passenger vehicle. Solo went public about 2 years ago, and it's been a rocky ride for them. So let's roll into it and see exactly how rocky it's been. Right now, they're valued around $3 per share. Let's look at the 5-year history. It IPO'd around $6 and quickly tanked. It hasn't reached above IPO yet, so this is actually one of the more riskier, I guess, car manufacturers. It went as low as below $1. That's insane. It has gone up a little bit at $3, so it's not a terrible stock by any stretch of the imagination. It has potential. It's not something that that excites people, similar to what Elon Musk has been doing with Tesla. I'm sure they have great range, but right now they're not generating enough buzz to really generate that stock value to increase higher than its IPO price. They're one of the cheaper market caps. They're only $194 million. And as you see from cars, this is probably not something I'll get, but if you're interested in something like this, definitely pick it up. It is very cheap, and it has potential, especially if they shoot out to more, I guess, smaller businesses, especially around the world. This could be a potential good thing for commercial companies. Maybe even if they have a partnership with like Uber Eats as their electric vehicle, something like that. You know, if they have a partnership like that and use those vehicles to do their deliveries, there's potentials with it. You know, as 1 seat, so that's all you really need for like an Uber Eats driver, or you know, Postmates or anything like that. We'll keep an eye out for it, but this is one of the companies. Let's just roll into the next one. The next one here is Archimoto. Now, what's interesting about this company is it's not just a electric vehicle maker. They're more the recreational side of things versus more commercial or even consumer based, similar to what you see from like Polaris slingshots and stuff like that. Imagine an electric Polaris slingshot. I think that'd be a cool idea. They're all street legals, and they also sell in 3 wheels as well, including the fun utility vehicle. The FUV is what they're shorting it as. And they also sell rapid responder models for emergency security and law enforcement services. So these are good for like patrol vehicles, or even like what we talked about, like food delivery vehicles. This is also a good thing as well. It doesn't look like it has great AC though, so I don't think this would be great in like hot states like Nevada or Arizona. If you go into like maybe do like desert dunes, maybe that will work. That'd be kind of cool. I'm not sure how fast it goes, if it's going to be exciting to take this out on the sand dunes. Obviously it makes sense for like emergency vehicles, taking one person from like from a short distance straight to the hospital, or security, like patrolling around malls or patrolling around Walmart and like that. And according to this article, perhaps the best part of Archimoto's story is that it's not competing with Elon Musk and Tesla directly. Now in terms of the stock itself, it's actually doing a lot better than our previous stock that we looked at around $5 per share. Let's check out its history. This also IPO'd around $5.90, so it finally beat IPO price roughly. So it looks like it generated enough spark and interest to kind of bring it back up to where it nearly IPO'd at. So that's also huge potential. Also a very new company. It's only about 3 years public here. Its market cap is around 179.73 million. All right, the final one that I'm going to discuss here, I think it's going to be a huge one. I think it's one of the bigger ones I can think of right now, more so in the direction of the commercial side of things. But as I mentioned before, commercial is huge, and anything commercial related, you need it. You need truck drivers, you need truck deliveries. That will never go away ever. Like obviously we're going to have, you know, air delivery and stuff like that, but obviously from the air it goes straight to a truck. That truck goes into the warehouses and delivers any goods and services there. So trucks is always going to be needed and in demand. So this company that we're going to talk about right now is called Workhorse Group. These are huge. They're currently valued around $1.4 billion. And according to this article, they not only do electric vehicles, but also electric delivery drones as well, which is exactly what Amazon was trying to do. So imagine that. Imagine Amazon teams up with this company or buys this company. And as one of the older companies as well, it has its roots back to like 1998. So it's a very old company. Now, as this article pointed out, delivery business is booming, especially during a pandemic such as today. Some of the biggest customers that you have here is UPS, and Ryder Systems are among its customers. Now, this is what gets kind of like crazy here. The numbers get ridiculous here in a hurry. Workhorse expects to sell 400 vehicles this year, not 400,000 yet, just 400. The company is still worth well over $1 billion. That's insane. So imagine if this number doubles, triples, 5 times, or have that same 400,000. This number will jump dramatically as well. Looking at the stock right now, it's $15.72 as of right now. Let's take a 3-month history. It was around $2 per share about 3 months ago. Only 3 months ago now. Because of the pandemic, obviously it rose a lot, especially around June. Spiked as high as $21. Now it IPO'd around $5.90 back in 2015. As you can see, it kind of been like averaging, you know, $5, $6, $7, stuff like that. As low as even less than $1 at one point. Because of the pandemic, I would assume it had spiked up dramatically. And obviously I'm a big advocate on like delivery drivers and all that. I have high respect for those guys, you know, busting their ass. Because my dad used to be a truck driver back in the day, and I know how hard he worked. I have a couple of friends who are also truck drivers who also bust their ass during the pandemic. So I for sure am a big advocate of like EV cars taking over the truck industry and how big potential that is, or especially in the truck commercial side of things, where it has a lot of growth potential, and that's exactly why Tesla is also trying to do their own commercial trucks as well. We've seen prototypes of that, but obviously there's companies who are a little bit ahead of him in this department, and obviously Tesla has a much bigger gain in the market. But it's kind of give or take. Obviously competition is always going to be good. You can always go for the big dog, the Tesla guys. So if you want to support a company that has a lot of potential as well, that also is in a market of more of that commercial side, this is also a great company to get into. Now, this company is currently valued around $1.43 billion. No dividend yield similar to other companies. So obviously we don't know how long this pandemic is going to last. So having companies like this that are pushing the envelope into electric vehicles, like even electric self-autonomous vehicles, that probably be the next step in the evolution of commercial vehicles such as this. But obviously the first step is to kind of push out the electric and emission-free companies out there such as this and Tesla and the other 4 that we discussed here in this video. Now, as I mentioned, I am not a financial advisor, so I can't tell you what to do with your money, but these are pretty much the 5 other companies, alternative companies to Tesla, that are much more affordable and also has great potential and also very early phase. So it's great to jump into like that early companies that you see a lot of potential for and believe in it, invest in it, and see the growth potential as it goes on years to come. So believe it or not, Tesla back in 2010 IPO'd at $17. $17. And see where it is right now. These companies that we're talking about right now also IPO'd at a very cheap price at around $5, $10 as well. But they also have many more years to come as well to develop their technologies, increase their brand awareness, all that good stuff. So this is why it's kind of like in that gray area of where you should like either invest into the big dogs or invest into smaller companies. Obviously, I'm showing you both options here. Obviously, they're probably not gonna grab the entire market share of Tesla, but at least they'll give it a shot. So competition is good. Competition is great. So keep that in mind when you're doing your research as well into these companies. Of course, those are my take into the companies and what I think. Obviously, if I missed anything and you guys want to talk more about a specific company, let me know in the comments down below. Alright guys, that pretty much concludes this video. Hope you guys like it. Obviously, always fun to talk about stocks, always. So as I mentioned before, we do stream on Twitch every Tuesdays, Fridays, and Sundays around 6 p.m. Pacific Standard Time. So definitely follow us there, join us, talk about stocks, talk about the games that we're playing, and all that good stuff. You just want to hang out with the silly boys. If you haven't already, be sure to hit that like button, subscribe to this channel if you've already done so. So let me know in the comments down below. Do you think Tesla will be the top dog forever? Do you think people will grab some of that market share from under Elon Musk's hands? Let me know. I'm very curious to see what you have to say. Obviously, thank you again. We'll see you in the next video of the Market Watch with Talos. That's pretty much all I got. This is Talos out. One half of the tag team champions, the Stilly Boys. We'll see you next time.